Gold and silver both continued the bearish trend, and again coming back to the strong support at 1755 and 1940. If you recall, those were the levels I had shared that this is going to give a good support if it drops below 1764 and 1960 levels. Now what is going to happen today? We will see with the help of candlestick charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon. If you are committing this mistake by not subscribing, definitely you are missing on the profits, and do watch till the end. Listen to it carefully. First we look into gold, followed with silver. The next update will be up before the US cash session, and let's start the day with gold first and see. If you see the hourly charts of gold, it is again looking downwards and skewed downwards. 1760 is the level beyond which you can go long till the time it trades below 1760. Probably there is little more room, but 1755 is definitely a good support here, and it is trading almost at the same level. See, it is trading at the bottom of the Bollinger Bands. It still has some room for it to go down. Directional movement is bearish. Stochastic is oversold. MACD is bearish. RSI is near to bottom, indicating probably there is a chance, but a little chance for it to drop, but let's see. See on the 2-hour chart, so this is the fourth consecutive red candle, and it is again skewed downwards. Till the time it trades below 1760, do not go long. Only level to buy today is 1760. Beyond that you can expect 1764 and then again 1770 levels. So do go long at these levels till the time it trades below 1760. It is looking forward to 1750, which is very good support for now. So let's have a more detailed look now. Directional movement is bearish on the 2-hour charts. Stochastic is oversold here. MACD is wide, divergent and bearish. RSI near to bottom, indicating yes, it may still drop a little. There is a room for it to drop further. 3-hour charts. On the 3-hour charts again, second red candle here. After the little retracement, two big red candles, and then a smaller green candle, and two red candles, but the size is smaller, indicating that the bearishness is getting diminished here. So yes, it may drop till towards 1750, 1752 zone, and probably at those levels we will see how it behaves, because 1750 is another very good support out there. Directional movement is bearish. Stochastic is oversold. MACD is bearish. RSI is near to bottom there. And if you look at the 4-hour charts, on the 4-hour chart, see one thing, after breaking this resistance at 1760-64 zone, it is given consistent red candles, and see it is creating the steps. And once it creates the steps, only breakout is if it breaks this zone above 1760-62. Yes, you can consider that as a bullish reversal, and consider that it may try to attempt and achieve 1764 and 1770 levels. Till the time it trades below 1760, see it is trying to create a step, and then a big candle of such shape can be expected later. It means that there is a probability for it to in fact drop below 1750 and achieve 1747, which is the strong support just below 1750 levels. Directional movement is bearish on the 4-hour charts. Stochastic is again oversold. The MACD is also bearish here. RSI is near to bottom, indicating that the markets are, and specifically gold, is still bearish here. Now look at the daily chart. See, yesterday I told you after this candle, where we have seen two steps candle, I told you yesterday only bullish reversal is beyond 1774, else it can retrace back. Precisely it achieved this zone at 1773-74 and retraced from there. I told you this is going to be the resistance zone. Till the time we don't consider that as bullish here. It has reversed from there. Now look at today's candle. Again 1760, it has reversed from this zone. Also look at the size of the candle here. It is diminishing. Though it is bearish, but it is the bearishness is getting reduced, the bearishness is getting diminished. But yes, if and only if it breaks 1750 today, you can expect 1747, which is going to be a good support for the day. And in fact 1745 and 42 levels can also be seen. Till 1740 there is a probability that it can drop. So below 1760, till the time it remains, we can expect a drop. 1755 is a good support, 1750 is the next target, then 1747 and 42 levels will come into picture. So you can place your trades accordingly. Only buy entry is if you see it trading above 1760. Only buy entry is if you see it trading above 1760. Directional movement is bearish. Stochastic is oversold. MACD has just crossed over. It is divergent. Remember, it may try to give you another big bearish candle so that the divergence may increase. There is a possibility for a drop and it may remain in red. RSI looking downwards. So one observation that it is possibly going to give you a red candle, but then you have to be cautious of 1750, which is a good support here, and then 1747, 45, 42 levels till 1740. We have got another support in gold out there. Probability exists that it may try to attempt and achieve. See, it has got a long distance to cover on the downside. This is a liquidity void on the daily charts which it has to cover. The next support zone will come into picture here at 1742 levels. Probably if it continues to stay below 1750, you can expect it to come back till towards this zone 1740-42 zone, which is going to be a very strong support for gold, and then we will see how it behaves there. So yes, for the day till the time it trades below 1760, yes, you can stay long. The first target could be at 1755, then 1750, then 1747 and 42 levels will come into picture. Be watchful of 1740-42 zone. This is going to be a good support. Take your positions accordingly. Let's have a look at silver. Silver on the hourly charts too is skewed downwards. Only long entry is if you see it trading beyond 1950 levels. Beyond 1950 you can expect 1960, 1970 levels, which is going to be good resistance. Then 1980 will come into picture. Else till the time it trades below 1950, probably we may see it looking downwards. The support there at 1930 is there. Then 1920 is another strong support for silver. Directional movement on the hourly charts is bearish. Stochastic is oversold. MACD is bearish here. RSI 2 is oversold here. Likewise on the 2-hour chart, see, first 1940 is a very good support, but it is trading around almost at those levels. See, it is at the bottom of the Bollinger Bands on the 2-hour charts. Below 1940 it is 1930 and then 1920. 1920 is the ultimate level which you should look at. If it continues to trade below 1940, you have to be cautious of 1940. Now look at the 2-hour chart, fourth consecutive red candle trying to trade in this. Only long entries above 1950, that is also very clear. And also, yes, you can go short if you see it trading below 1940. You can expect 1930 and 1920 levels. Directional movement is bearish. Stochastic is oversold and it may try to bounce back. MACD is bearish. RSI is looking downwards, so most indicators are indicating that silver has still some room for it to continue with the bearish momentum. Look at the 3-hour charts, a flat opening. This is the second red candle, and probably we have to be watchful how it behaves at 1940 levels. Once it drops below 1940, you can expect 1930 and 1920 levels. Directional movement is bearish on the 3-hour charts too. Stochastic is oversold. MACD is wide divergent and bearish. RSI is oversold too. Hence, a bounce back can be expected, but at which time frame and when, we have to see for it. We have to look for it. We have to wait for it. Look at the 4-hour charts. Likewise on the 4-hour charts, after a little retracement, this is the fourth red candle. Only long entry, as I said, is above 1950. If you see it trading above 1950, go long for 1960, 1970, 1980. 1980 is going to be the ultimate resistance on the downside. Yes, if it sustains below 1940, or rather I will say till the time it trades below 1950, I will expect 1940, 1930 and 1920 levels. 1920 definitely very strong support now. Directional movement bearish, stochastic oversold, MACD bearish, RSI oversold. Almost all the indicators on all the time frames are either oversold or are bearish. Hence you have to be cautious and wait for a reversal. But remember, indicator oversold means we can see a reversal. Now look at the daily charts, a flat opening out there and trying to trade bearish. Once it trades below 1940 50 levels, you can expect 1940, and then we can expect see a lot much to cover for silver. It can come back till towards 1930, which is a good support, and then 1920. This zone is a very good support for silver. In fact, below 1920 there is a possibility to drop till towards 1880 levels. I will be watchful of this zone at first at 1940, then 1920, and then below that we may see a good drop also. Stay short till the time it trades below 1950, but remember it is oversold and hence a bounce back can be expected. 1940 is a good support. If it sustains above 1940, And yes, only long entries above 1950. Do not commit this mistake of going or buying early. Only go long at 1950 levels. Beyond that, you can expect 1960 and 1970 and 1980 levels. Also, 1980 is definitely going to be good resistance. So be watchful of this. On the downside, be aware of 1930 and 1920 levels. Take your positions accordingly, trade accordingly, and if you appreciate my effort, support my effort, do become a patron. The patron link is mentioned in the channel and video description. The contribution is hardly anything. You can just contribute and support the channel out there. Also, if you want to learn the art of reading markets, you can join my mentorship batch or join my signals group. Reach out to me for more details. My telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead. Thank you.